Welcome to Trading Nation. Let's run through some pretty incredible statistics about the S&P 500 according to LPL Financial. The S&P 500 just posted its longest streak ever without a 5% drawdown. That's going back to June 2016. What's more, in that each time the S&P has closed positive this year, it's also closed at a new all-time high. When you're at an all-time high, that will do that. The question, of course, is this: just how much juice might be left in this market? Boris Schlossberg and Max Wolff are your Trading Nation team today. Max, the superlatives pretty much for this market are done. I've run out. But do you think this market has run out of steam?
Yeah, so look, I think it's run out of fundamental steam, or not run on fundamental steam would probably be a better choice of phrase for a while. My guess is we still go a little bit higher. I mean, and I'll tell you why. We have a situation where the market trades up on the hope that it won't be so bad when there's a government shutdown, then trades up when there is a government shutdown, then trades up in relief when the government shutdown that wasn't a problem is over. So long as you have that kind of sentiment and you have a little bit of magical thinking with really good numbers to back it up, and everybody's a little bit high at the party here, I think it goes a bit longer. But I mean, by the second half of 2018, I don't think there's much gas left in the tank. I do think people should get their mileage now.
What about tax reform, Max?
I don't see anything right away.
What about tax reform, buybacks, increased dividends, a new wave of cash coming into the market?
Right, all those things are probably pretty helpful, but we've been rallying for 3 or 4 years without the fundamentals. So the joke is, if you get growth with no inflation, you eventually get inflation without much growth. And if you can rally forever on low interest rates and mediocre GDP growth, then eventually you can turn south even when you have the good GDP number, because let's be honest, you've already priced it. So yeah. I don't think it's bad right away, but I think eventually the laws of gravity are tough to bet against.
Yeah, and Boris, don't quote me on this, even though it's like, everyone's watching, so you can just quote me on this, which is something in effect of like half of S&P strategists, or half of strategists' S&P target have already been hit for the entire year.
Right.
But that doesn't mean they can't increase them.
The S&P reminds me of Bitcoin.
Uh-oh.
We are at 97 on the RSI for the last 7 days, I think, on the S&P.
RSI, relative strength indicator?
Relative strength indicator, yes, which is just uncharted territory. We've never been here before with the kind of strength. And yes, I think, it's impossible to, of course, call the top. But it's one of those kind of things that, as one of the Supreme Court justices says, I know it when I see it. I think we're going to be able to see very soon, if the S&P begins to crack, that some sort of an intermediate term top is going to be set in. We definitely know that there's going to be some sort of a correction coming up. It's just impossible.
Do we know that? Could have made the same argument last year. Now, as we pointed out, it's the longest period of time ever without a 5% drawdown.
Let me flip the tables on you. If we continue at the pace we continue now, the S&P will double in value by the end of the year. So if you sort of project just in perpetuity what's been going on for the last 10, 15 days or for the last 20 days, it becomes ridiculously the valuation becomes absolutely ridiculous. And nobody, I think, is going to forecast a doubling of S&P by the end of this year. Of course, anything is possible. But so my point is that we are going to stall for whatever reason, maybe a macro. So my argument is actually, I don't think the economy is going to be nearly as strong and healthy as everybody anticipates going forward. I don't think we're going to get nearly as much of a juice from the tax reform as everybody thinks, and that could be the one straw that breaks the camel's back.
And I would add to that, just sort of in terms of metaphorically, a string of sugar highs feel better and look better than a longer sustainable kind of run. But a longer sustainable run has been elusive. And even if we get it now, it's sort of late and we've already priced it. And I'm not so sure we do get it now. So my guess is second half of 2018, you start having to pay for some of this partying is going to produce more hangover than bliss.
Okay, Max and Boris watching the overall market. One thing I do know is it is likely to be a more volatile year than last year because you couldn't be less volatile than last year. Boris and Max, thank you both very much. Folks, tune in to the live version on CNBC's Power Lunch. I'll see you there as well. Take care.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.